Thank you all so much for joining. Maria, let me start with you. When you're talking to clients about opportunities in data centers, where are they? What are you most frequently pitching and hearing back of where people want to be?
Yeah, there's many conversations and many opportunities.
I'm sure.
I think my conversations with clients are primarily around the supply chain and infrastructure constraints. So obviously power is the largest constraint that everyone is talking about. In addition to that, I think what people don't talk about as much is some of the other hardware like high voltage transformers, backup generators, all of which are highly constrained as well.
It also just speaks to the complexity of this ecosystem. Melissa, how about you? What have you seen in your conversations as the sector within data centers is most ripe for opportunity?
You know, it's incredible, and almost 15 years of practicing, I've never seen such a dynamic industry, and it's changed so much. Flashback 2022, take private of CyrusOne, that was $15 billion. Now we're looking at $40 billion deal for Aligned. Within that time, the valuations changed because of the size and scale. It also created this opportunity to invest in so many different parts of the value chain, whether that's actually a development project, a stabilized asset, going to the GPUs, the fibers, all of the pieces you can invest in now like you never have before. So I think everybody's kind of looking for the same pockets of capital. So it's what can we do different? Where can we protect risk? Where can we get the best returns? Because at the end of the day, you're still sourcing from the same pools of capital, and the demand for capital is just at a level we've never seen.
Well, you are one of those pools of capitals lending out money for this. Where do you find that kind of ticks off the boxes that Melissa was just talking about?
Yeah, it's interesting. So at Stonepeak, we're an infrastructure manager that's focused across the infrastructure spectrum broadly defined, spending a lot of time in digital, obviously a lot of time in data centers. We stood up our own hyperscale data center platform last year. And so where we're seeing a lot of opportunity and really where we're focused are on opportunities that are really, we're looking at through more of an infrastructure investment lens. So making sure that the power is there, that we have the grid interconnection activity, that we have the strong contracted demand and highly creditworthy counterparties. And so I think where we're spending time and making sure that where we're directing the opportunities is places that do have the power, which I think is becoming one of the biggest constraints, but also the biggest area of value add if you can sort of solve
I was going to say, because, clearly that constraint is a problem that everybody's thinking about, but Kate, how do valuations look? Because presumably that opportunity set is small because it is a bottleneck.
I think that's exactly right. I think you're seeing, people ask if sort of are valuations fair in this market or they're, overblown. And I think it's a little bit of a mix, and it really depends on having all those components in place. And so where you do have assets and companies and platforms that are focused on those, having the power, having the interconnection, it's not as much of a speculative build. I think premiums in those spaces could be warranted. I think where you're seeing the differentiation is more for the spec builds or for, so there's definitely a differentiation between capacity on paper and real deliverable capacity.
How much of a concern is the spec build, Marie? This idea that you could have stranded assets of people who are saying, oh, I have this, a project site I'm building, but I don't yet have power and I don't yet have a lease signed.
It's a real concern. I think particularly the sites that don't have power and don't have equipment buys for those critical pieces of constrained equipment. Look, it's a market where you're going to have winners and losers despite the growth. And so those are definitely some that are considered riskier.
Yeah, I think it's spec builds are hard. And as we look at going to underwrite and helping our clients look at investments, the risk profile is the number one thing, because it's going to drive, can you get financing? Are you having to look at an equity build? Are you doing a preferred investment? What type of ultimate financing solution? I think you have to look, our clients are looking at the very beginning of the life cycle to say, what happens from pre-dev all the way to kind of what is the quality of the contract? Because right now, even projects that are under contract, if you've got 5 hyperscale contracts with the same person and one does not look like the other, financing is not going to be the same, and that's a different risk return profile for an underwrite. So I think as we look kind of what people are focused on, I'm still not seeing a ton of people involved in the spec because there's just too much focus on right now diligence up front on the power, and can you actually get there? What is the timeline? Is it going to be available, and what is the bridge solution? I think people are getting incredibly creative as it relates to the power alternatives. So considering alternatives like, micronuclear fuel cells, turbo cells, and you're looking at alternatives to bridge that gap for a grid connect eventually.
By the way, I'm assuming some of the creativeness is not just in the power, but is in the financing. And Kate, I feel like that's where you probably come in. How much of this ecosystem is not getting financing from traditional banks, but is looking to players like Stonepeak?
Sure. I mean, I think it is interesting because there has been this evolution as, from the beginning of the data center development, which it's gone from a more real estate type lens to now being viewed really as an infrastructure asset where you need all of these other components in place. And I think one interesting trend is just because there has been this overbuild, you're seeing the traditional markets like the bank markets. We're hearing that there's an oversaturation. They're sort of at capacity for certain hyperscalers and certain developers. And so I think borrowers are having to get a little bit more creative about what markets they're accessing. And I think, for well-structured projects, the bank market's still very much open. There's a lot of appetite. I think we're starting to see borrowers pivot to more accessing the public markets. I think there's a really strong depth of investors in the public markets, and we're seeing the pivot there just to get breadth of capital and different pool of investors. And then I think you're also, depending on the earlier life stages of the projects, like really seeing private credit come in play as well. So I think for well-structured projects, there's really no shortage of capital, but it is really being able to show that there's appropriate risk allocation and mitigation of all of the components that we've been discussing.
I think the market's gotten creative, though, from that perspective. 12 months ago, you didn't talk about the bond market as it relates to a solution for data center construction, much less long-term financing. And within the last probably 6 months, there's been several, including like the large related transaction that was, I think, a $14 billion bond offering. So we're accessing pockets of capital we've never seen before.
I am just struck, though, like one of the common threads that you were talking about, Kate, is you can do that assuming that you are one of these like high quality sort of offerings. And Maria, I mean, how many of these offerings are high quality at the moment? Like, how many are able to access all this creative financing, are able to access public bond markets? Or for most that are looking at building a project, is it a steep hill to climb?
It's definitely a steep hill to climb. If you look at how investments were a few years ago, it was largely being funded by hyperscaler balance sheets. And so now the complexity has just increased as the amount of gigawatts builds out.
By the way, we don't have a lot of time left, but I would love to just hit on what Scarlett was talking about, and that is sort of the political backlash. Maria, how big of a headache is that for getting projects done? Does it slow down some of the deal flow? The fact that you have Pennsylvania, places in New York talking about moratoriums, especially as we head into midterms?
Yeah, the community backlash is very real. And concerns that people have are higher utilities, the water usage, the noise, the emissions in their communities. And it now has to be considered part of the business case. It's now part of the investment choices that have to be made. And certainly it's shaping where the capital allocation and where the site selection is.
Do you think it slows down the pace of deal as well? Might we not see it as much as we did maybe compared to last year, for example, because of the political bottleneck?
It'll definitely slow down the pace because some investments have already been made, and now we're seeing players pivot from those and abandoning some sites in some cases.
Kate, does that happen to you that you're looking at investment and you say, whoa, let's pump the brakes on this? I'm concerned about the politics behind it.
Yeah, I mean, I think across our portfolio, we're always highly focused on regulatory and permitting, and it's a big part of sort of our diligence process. And so obviously it's a big piece of the investment making decision process. But I think, it does slow it down. I think it is more of a filter of just making sure it's the right types of projects are getting built. And that means the projects that have the access to power, the grid interconnection, the contracts, the sponsors that have the capital to make sure that they are being able to fund the infrastructure that they're using. And so I think, it's not necessarily a roadblock. It's just more of a filter to make sure that we're supporting the right types of development.
Melissa, I'd love to give you the final word on this because I'm assuming this takes up a large portion of your day and your work with clients right now.
Yeah, absolutely. It's certainly front of mind of needing to make sure that the community engagement angle works. It's hit every aspect. Lenders are focused on it. The customers are focused on it. The sponsors are focused on it. What happens if a moratorium goes into place? What happens with the customer contract? What happens with the financing? Ultimately, these are state and very local issues. And so it's something that I've seen the most successful developers have been those that have gotten into the community, gotten to know the people that are going to have this data center around them, making sure there's buy-in from them. And it's really kind of taking an approach of making sure that all of the pieces fit together, but this is certainly a gating issue as it relates to transacting.